Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, September 1st. It is 6:13 as I'm starting the video this morning. And as always, I think you'll have good luck running your video player at 1.25x. Let's take a quick look at futures. Not a ton going on. Small caps are up 0.6. Large caps and NASDAQ are pretty much flat. I mean, up a little bit, but not a lot. The big mover this morning is copper, down 2%. I did not look for any news on that. That's kind of surprising, but I want to keep an eye on copper and oil today. We do have oil inventories at 10:30, so that's on the board. Other macro items, we've got ADP at 8:30, I believe. And then we got a couple of manufacturing numbers. We got a PMI and an ISM manufacturing this morning. I didn't see a whole lot on the earnings front before the bell, but then after the bell, we've got Chewy, Five Below, ChargePoint, Okta, Viva, and Nutanix. So we've got a lot of we got some retail there. We got a lot of software there. And then we've got mail order dog food in the e-commerce category. So some interesting stuff after the bell on the earnings front. Before we get into the charts, I've got a nice story to share with you this morning. Yesterday, if you've been following along, Amazon had a nice day yesterday. Probably one of the, although I didn't look at each individual one for comparison, Amazon was up nicely, and we had been calling out some levels in the trading room, and referring to the morning charts and looking for targets and flags and the whole thing for active traders. But anyways, at the end of the day, I got a nice heartfelt note from one of the guys in the room. And actually, it's a guy that is relatively new to the room. And I took it from his note that he's relatively new to trading. I don't know all the particulars about his history, but he said that yesterday was the biggest, most profitable trade of his career, and that he made more yesterday than he does in a month at his, quote, real job, and that he almost cried at the close of the day that he did so well. And it's just a real uplifting note from somebody that he's not active in the room. I think that was the first real post that he's made, a private message to me. Of course, I let the rest of the room know that he did real well, but that's awesome. There is and continues to be power in the charts, power in trading level to level. Of course, it takes some time and discipline to not let your emotions get in the way of that, especially with a stock like Amazon that has the ability to scare you out of trades with a red bar here or there. But if you've got your emotions in check and you're trading level to level, you can have a lot of success. So that was great to hear that. It's actually inspiration to me to hear those kind of stories of people using information that I've provided and using their own skill to build on those levels and have a good trading day. Now, I'll also share with you what I shared with him. The trick now is to not become full of yourself after a great win and think you know something and get all emboldened and have the market take that away and more in the subsequent days ahead. I've found in my own personal experience, after a nice run, a run of success, whether it's a massive win on one trade or having a series of winning trades and having like a great 2 or 3 weeks, get full of myself, start believing that I've got it figured out, and build outsized positions and kind of get a little crazy, go on tilt a little bit, and then the market just wipe out a lot of those gains in just 1 or 2 days. So when you've had success, keep your antenna high, guard against going on tilt, keep your position sizes the same as they ever were, keep that discipline, honor those stops, because making money is one thing, keeping it is a whole nother thing. So let's leave it at that. But congratulations to that trader, and I hope you're all having the same type of success as he did yesterday. So let's move along. U.S. dollar got a little up channel here. Yesterday we broke below and tested the 50 EMA, closed back up near the trend line. But what I want to say is keep an eye on the dollar, keep an eye on rates. Why? Because we've got 2 scenarios. If yields stabilize or go higher and the dollar comes down here, breaks the 50, breaks the 200, and moves down below, you're going to see this scenario 2, this regime, start to dominate. Right now, we're kind of in a scenario where both of these are kind of working, but it's day to day. It's day to day. And what I mean by that, rates tick up, and then rates tick down. We've seen those whipsaws. But all I'm saying is, if we see rates begin to march higher and the dollar begin to march lower, what's going to happen is this scenario 2 regime will start to dominate the tape. The banks will work better. Materials, industrials, commodities, that kind of thing, the cyclicals, the reopening trade will start to pull away in terms of performance. So let's keep our antenna up in that regard as the dollar begins to make a move below this channel. And I think the floodgates would really open if the dollar came down and lost this 200 here, right at 92.2 on the USD chart. And if you don't have, this is an end of day chart, what you can look at during the day is UUP, or if you have futures, you can look at the dollar futures and kind of get a feel during the day what's going on. But I think it's fine to look at the end of the day if you don't want to look at those things during the day. So that's that. Also, any new traders that are new to the channel that are interested, here's a little instruction set on how to register for all my content. You'll find a link in the show notes where you can jump to this registration page. We'd love to have you. That way you'll get an email from me, morning, noon, night, all kinds of weird times during the day when I put together content and send it out to the crew. So we'd be glad to have you. Now just quickly, our yields ticked back up above 1.3%, and as we've been discussing, I want to see yields hold 1.3% and either gradually move higher or just come up in this range between 1.3 and 1.4%. I think that's going to be a sweet spot where both of the regimes will work. The scenario one that is tilted towards technology and bubble stocks, and scenario two, which is the cyclicals reopening. And I think if you get a break above 1.4% over time, I think the cyclicals and financials and all that stuff, commodities will begin to assert themselves to a higher degree. Okay, let's move on to the indexes. Not a lot going on yesterday. I mean, yes, there's always things happening on particular stocks, but as far as the SPY was concerned, more or less consolidating this move from earlier in the week. And I think we've got a pivot here at 451. If we hold that, everything's fine. If we drop below, I think you'd probably come into the midpoint of the channel at around 449.50, 449, in that type of area where first support would kick in. And then if we drop below that, then obviously opens up more downside towards the bottom of the channel. Here's just a blow up on that on the 30-minute chart. We do have a little gap here that will eventually need to get filled. You can see that kicks in right around 451 that we tagged yesterday. Top of the gap held on its first try. Now we closed down towards that area at the end of the day, but I've dropped in a little trend line here just as a visual reference. I'm not sure that it holds all that great of significance. I mean, we've only got a couple points of reference here. That's not going to be a real strong trend line that holds a lot of support. But if you fill the gap and then break below this trend, then you can pretty much count on a move to 449.50. And then, if we were to lose that, then we're definitely on the wrong side of trend and having a little bit of corrective activity. Same thing for the Qs. Had a big move down on the open, and we really didn't do much after that. I mean, we came down into this 378.50 area, got a bounce, and then it just kind of just went flat the rest of the day. But one thing that red bar did was kind of validate this 378.50 as a more important support level, so that today, if we were to drop down below, it would definitely open up a move towards 377, where we've got this open gap. So I would be keying off of that. If we were to see a downside move, I would be keying off of that 378. But otherwise, this morning here, if 379.50 holds, or if we take out the prior high up here, then you can certainly be long. I continue to be very positive on small caps. This is the daily view, just to show you this big consolidation range that we've been in all of this year. Yesterday, we got the back test back into 224. If you weren't in IWM, that was your opportunity to take a position on this back test, and now we bounced from that level, and now we're up in the pre-market. Obviously, if we're up 6 or 7 tenths on the open, we'll have that gap below. And one of the things I've noticed on IWM lately is a big bearish opening candle, and then it starts to build from there. So if there's a gap this morning, a gap higher, a gap below price, and they give you that big red bar, that first opening candle or two that goes down and closes that gap, I think that's going to be buyable with a stop below. And I'm looking for IWM to grind higher. And we've got a level here at 225.25, let's call it, more or less almost where we closed or had that low candle into the close. If we were to pull back into there or pull back into 226 to close the gap, I think you can buy that. Just set a stop below, and if you get stopped out, honor it. And then if there's a reclaim, if they undercut this and then reclaim 225.50, I would be a buyer on the way back up. Facebook. Is consolidating in what looks to me like a huge flag. If you can see that there, here's the flag. Here's a big impulsive move off of the bottom of this gap. We came up and filled the gap. We broke out. So now we're consolidating at all-time highs, and I'm sure you're aware of the TA axiom, bull flags fly at half staff. And if that's truly the case, this has a big measured move coming. So for today, I think you can be long against the low of the flag, which looks to be like around 379.25. You can try a long against that level, or you can wait for a flag breakout above 381. And if you got a breakout above 381, you should certainly be long. Why? Because that's in blue sky. You're breaking out of a consolidation flag with a measured move target that's way up there. So Facebook remains very constructively positioned. Apple really didn't do much yesterday. Had the gap down. It fought back and then kind of lost it at the end of the day. I think it's pretty clear here. I think you can use 151.25 as your bull bear pivot. I would expect that to hold. But if it doesn't, then there's the possibility of a backslide into 149.50. But as long as that holds, your first target is going to be the prior high up here at 153.25. And then, of course, here again, we're at blue sky territory on a break above this prior high. And if you want to be in the name, that's where you gotta hit it on a breakout to all-time highs. Of course, if you think you're going to want to be in it, here you can get it $2 cheaper if you just set, if you get a little move into 151.25 and you want to be in Apple anyways, then you can buy it here, set a stop below, and then you'll have your first target $2 higher, and then hopefully get the breakout. And if you get that breakout, then you can move your stop up to 153 or so, back under this level, and so then you'll lock in that first move in terms of your profit. Tesla had a decent little day, but most importantly, we've filled this gap, and I've showed you yesterday. I've got it drawn a little different here. This is the daily chart. Here I have the top of the gap at 740. That's probably the real number. So I consider this gap filled. And so now on any break above 740, I think you can look towards 770 as being your first target, going back to this level here. And then, of course, if you get a breakout above 770, it has a lot of running room there. And we do have a nice uptrend line that's got a lot of touches along the way. Should be a good line. And also, always keep in mind, where is price in relation to all the moving averages? And you can see that all the moving averages, the 8, the 20, and the 50, and the 200, are all bullishly aligned, bullishly stacked, and they're all turning up. So price is above everything. That's a bullish condition. You take out 740, it looks good to 770. So now definitely Tesla is in bull mode. So let's see how far they can take it. Microsoft, disappointing. Had this impulsive move up to 305. Had some profit taking. They brought it back up, but then had a relatively weak close. I'm in it, but it's got to hold 302. Anything, below 302, I will probably have to exit and then, have it come down here, possibly fill that gap, do whatever it's going to do. But I'm looking for a breakout here. So I'm more or less long against 302 with a first target of 305, and then hopefully get the breakout above 305. So that's how Microsoft is setting up. Here's that Amazon chart, moving its way up off of the floor, off of 3,200. Came up to this 3,300, where it spent a couple days consolidating. 3,300 was a nice pivot level. Once it broke above, it went up to 3,375. Broke that, came up to our next resistance level at 3,440, consolidated, and then broke out above 3,440 and ended up here towards 3,480. I think it can find its way to its next target here at 3,500, 3,510. Looks good. It's, working its way up. RSI is overbought, but I wouldn't let that worry you. Be worried when it's not overbought anymore. In other words, once RSI gets above 70, you want to see it stay above 70. And same thing with PPO, well above the zero line. What you just don't want to see is PPO roll over, RSI drop down below 70. If that is happening, you're sure to see that in price. So, this is vulnerable to come back to 3,440. So, but if it did that and you wanted to be long, that's your level right there on a pullback. Breakout, pullback, back test, and then go. So 3,440 is definitely your pivot today. If you're already long, stay long, and look for 3,500, 3,510. Google, more consolidation. Set yourself an alarm at 2910, and you get that breakout to all-time highs. All-time highs you got to buy. Buy a breakout at 2910. set your stop just below and let it keep pushing higher. I've got a support level down here at 28.80, 28.75, right in that area. If you got a pullback there, certainly worth a try. Long. This is one of the few stocks where I'd say, don't even bother trying to get cute with some kind of short. It's been one of the strongest stocks within the FATMAAN complex, one of the strongest stocks in the market. Look for long entries. Don't, try to, I'm going to get short against 29.10 and we're going to get a move down here and then I'm going to flip bullish. I wouldn't even mess with that kind of thinking. If you want to be involved in Google, be involved to the upside until price gives you some kind of indication that things have really changed. Netflix. We're on the daily chart right now. Why? Because we've broken out of this $90 trading range right here, and now we've really at the threshold of breaking this 570 first resistance. If it can break 570, I think there's the potential for a quick move up to 585. And remember, our measured move target out of 560 is 650. 90 onto 660 or 560 goes to 650. So anyhow, if you wanted to be involved in Netflix and you haven't been involved, you get a breakout above 570. That's your buy trigger with a stop just below, and I think you can find 585 with that first resistance. Semiconductors. Bad opening first bar. Dropped us out of this channel. They brought it back up the rest of the day, but then closed right back at 271. That's your obvious pivot for today. Anything above 271, I think you can be long. Anything below 271, you got to be careful because it could come back down here to test yesterday's low or even come back here to 268 to back test that as well. So use 271 as your pivot. Now I want to show you a few chart setups. Keep an eye on home builders. It was in a coming out of this double bottom, made a move up to 74. Then we had a growth / rate scare, came down to the 50. Now right back up towards 74. I'd be a buyer on a breakout above 74, and then you can set your stop just below. But notice, even though we've had a couple of red days right here at resistance, notice that the moving averages are all bullishly stacked. And so I think a breakout above 74, this thing can see the prior high at 77. That would be my first target there. And really anything above 72, I think still keeps it constructive. And if you wanted to, if you got a pullback into 72, you could get long there. And you can see that's right where the 20 comes in. So you could get long at 72 with a stop just below, and then see if you get a move back to 74 and then get the breakout. So depending on if you want to, if you get a dip to buy, that could be an entry point, or get the breakout first and take that one instead. So a couple ways to play that. Snap has a very clear line of resistance here at 78. Got a rejection here, got a rejection here, got a touch yesterday here. All the moving averages are bullishly stacked. Set yourself an alarm at 78 and you get a breakout there. I would be a buyer at 78 on the breakout. So there's a nice little setup on Snap. Notice PPO is above the 0 line. Notice it's starting to flatten and curl higher. You get a bull cross here. Also, RSI above the 50. That keeps it in its bullish regime. The only thing left is to get the breakout above 78. So set yourself an alarm there and take it long if you get the breakout. What is this? Unity Software. We had what looks like a inverse head and shoulders. I've projected the measured move coming out of the neckline as about 43%. Price has recaptured all the moving averages. All the moving averages are now bullishly stacked. And we have found this resistance point on this large volume over price bar here, which lines up with 130. I would set an alarm at 130. I think if you get a breakout there, you can be a buyer with a stop just below. And I think this stock, when and if it breaks 130, I think it's got an easier path towards 160. Why? Because you've got a relative price void back here, and you really don't start getting into a lot of trading till you get up into the 150s, the 155s. You may see some a slowdown there, but I think your target on a breakout from 130 is this 160, 162 and a half level. So I really like that setup on Unity. Set your alarm at 130. Purple Innovations. They got, one of these online mattress stores. They do a bunch of other stuff as well. But I thought this was interesting. Whenever you find on your charts, when you're doing your charting, I always look for these kind of levels, and they kind of jump out at you on the chart. A test at 24 holds. Massive gap down holds. Touches. It's fairly obvious that 24 is a key level. Set yourself an alarm there. Or if you fundamentally like purple or are a type of trader that wants to buy at support, and that's what you're supposed to do if you're a technician, you buy at support and you sell at resistance. So, for instance, you take a position here at, 24.40. You get long. And it's going to be obvious if you're wrong. If you get a breakdown to 23 and a half that sticks, if you get a close below 24, that holds, you're out of the trade. Right? If it has held 24 for a year, your default position as a technical trader is that it's going to hold again, right? There's a bid at 24 on this stock going back over a year. So if you want to be long a name, it doesn't get any better than this if you want to be long. You get long against 24 and you say, you know what? It's going to grind higher. It's going to take out, recapture these levels, and then I'll be, off to the races. Let's take the flip side of this. Nah, I don't want to be long purple. I don't like the company. I got enough longs. Why do I need one that's way down here? I want to buy one that's breaking out, not one that's, showing a lot of weakness. That's fine. Set your alarm at 24 or set your alarm at 23.75. Why? Because you've got a compelling short if it breaks down. So you start getting closes below 24, you can get short with a stop just above, and you'll have some support down at 22, 21.50. But other than that, there's not going to be anybody home. Why? Because all these people, anybody that's long from in here will be trapped. And so you'll get a lot of sellers that, all the buyers that bought here at support will know that they're wrong. They'll have their stops hit. They'll be getting out, but you're going to be in on the short side. And all these guys will be the fuel to make your short work. So whether you're a bull or a bear, when you find levels like this, really, really important to flag on your chart, because really the most important pivot you're going to find on a chart like this is a level like 24. Same thing with lift. Look at the setup. What are we at? 47. 47, 47. Support, 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 support. Prices under all the moving averages. That's bearish, but it's at support, where over the last 9 or 10 months, there have been responsive buyers. So if you're bullish lift, it doesn't get any better than this. What do I mean by that? You're buying at a known level of support. If it drops below, you're immediately out. If you don't like the company, or you're going to wait for a short, you set your alarm at 46. It breaks down. If it breaks down, there's not going to be anybody home until 36 at this first volume over price bar right here, down here at 36. If that breaks, then you're down around 30. So again, on lift, set your alarm at 47 or 46, wherever you want to take action. That's a massively important level there. So, all right, we got ADP right out of the gate at 8:30. Watch small caps to keep working higher. Keep an eye on interest rates. You want to see them tick higher and stay in that sweet spot between 1.3 and 1.4%. Let's keep an eye on the dollar as it shows a little weakness. And let's see if we can get one of our two scenarios to work. Scenario one is technology driven with falling rates, or scenario two, which is cyclicals, commodities, financials with a falling dollar and a rising rate environment going forward. So let's see how we go. Again, new visitors to the channel, thank you so much. Hit the subscribe button and the alarm bell. You'll be notified of all my YouTube content. Jump over to the show notes, link up to the registration page where you can sign up for all my content with just your email. Takes 15 seconds, and I think or I'd like to think that'll be the best use of 15 seconds today that you could make. Long-time viewers and subscribers, thank you so much. I hope the information and content is helping you become a better trader as you focus in on making very objective entries with objective places to set your stops, and that you can focus in on your execution. Trust my levels, build your execution skills, you'll become a better trader. So let's leave it at that. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.